Hey people, I welcome you back to Caroline's Online Academy. Today we're going to be solving a realization account problem that was asked in the examination compartment 2023-2024 attempt. We are in the series of videos in which I'm solving dissolution of partnership problems from the sample question papers and previous year question papers released by CBSE. I've created a question bank compiling all the questions from the sample question papers and previous year question papers from 2014 to 2015 to 2023-2024. Actually, 2024-2025 sample question paper has also been included. And I created a document which I uploaded on the internet, and the link to that document is given in the description of this video. This question is the 48th question in that question bank. Let me go ahead and read the question and right away start solving without wasting much time. Sonia and Rohit were partners in a firm sharing profits and losses in the ratio of 3:2. On 31st March 2023, their balance sheet was as follows. Balance sheet of Sonia, capitals are given, general reserve is there, Sonia's loan is there, bank loan is there, creditors are there, building is there, machinery is there, furniture is there, debtors are there, stock is there, and we have cash at bank. Sorry. The firm was dissolved on the above date on the following terms. Building, machinery, and furniture, all of them realized 3,44,000. Debtors realized only 90%. Creditors took away half of the stock in full settlement of their account. Remaining stock realized 72,000. Realization expenses amounting to 14,000 were paid by Rohit. Children, this is a very, very simple problem. I don't know how they asked this for 6 marks, but anyway, they have. And hopefully they'll ask such questions all in the future also. So we're going to go ahead and solve it. There are no adjustments that are actually difficult in this question. You'll understand when I start solving it. So I'm going to just change the name to Sonia and Rohit. And I'm going to delete all of this because this is from the previous problem. Deleted. And we'll remove this border. All right, so that's done. Let's go ahead and solve the question now. The first thing that we need to do while solving a realization account problem is to transfer all the assets and liabilities to the realization account. The assets which are there in the asset side of the balance sheet will go to the debit side of the realization account. Understood? Debit side. That's opposite. There are no debit and credit sides in the balance sheet, but the asset side of the balance sheet is on the right hand side, as you can see. And all the assets will go to the left-hand side of the realization account, which is the debit side. Understood? So doing that now, I'm going to transfer building, machinery, furniture, debtors, and stock. So I'll just go and write to building. To machinery account. To debtors account, to stock account. I think I missed one. What did I miss? Furniture. To furniture account. I mean, you don't have to write in the same order, but I'm doing it so that I can remember. So building, machinery, furniture, debtors on stock. And the amount is 2 lakh, 1 lakh 40, 80, 120, 60. This is the book value. 2 lakh, 1 lakh 40, 80, 120, and 60,000. So you just transfer the assets to the realization, debit side of the realization account in their book value. And you add them and write in the outer column. So that will be how much, my dear children? 6 lakh. Similarly, you identify the external liabilities in the balance sheet and you transfer them to the credit side of the realization account. Now, what all do we have? Capitals are not external liability, that is equity. General reserve is equity. Sonia's loan is a loan by partner. Sonia is a partner. Loan by partner will not be transferred to realization account. Remember, loan by partner on the liability side of the balance sheet will not be transferred to realization account. And loan to partner on the asset side of the balance sheet also will not be transferred to the realization account. Then you have bank loan and creditor. So those are the two liabilities that we have in this question. So we have by bank loan account, and we also have by creditors account. The amount, I should have seen the amount earlier. But anyway, no problem. Bank loan is 2,20,000 and creditors are 70,000. So that will be 2,20,000 and 70,000, and that will add up to 2,90,000. All right, good. Now, after we have transferred the assets and liabilities to the from the balance sheet to the realization account, at their book value, the next thing would be to realize the asset. Realizing means what? Selling the asset. When you sell the asset, what do you get? You get money, money, money. So when bank is an asset increases in the business, bank account has to be debited. Asset account has to be debited. Right? In this case, bank account. So bank account will be debited, and sale of assets is an income for the firm and will be credited to the nominal account called realization account. Because during dissolution, there is only one nominal account, that is realization account. All income will be credited to nominal account. So when you sell the assets, the journal entry is bank account debit to realization account. So in the credit side of the realization account, they'll post by bank account. Understood or not, my dear children? And then we find that in the first point they've given that building, machinery and furniture together realize 3,44,000. So I'm going to write building. You might wonder as to why I'm writing this detail here. It is only for the purpose of checking later. And in the suggested answers also, it is given like this. So we'll write it like that. Furniture. All the three of them together realize 3,44,000. Okay, good. And then what do we have? Debtors realized 90% only. So 90% of the book value was realized by debtors. What is the book value of debtors? The book value of debtors is 1,20,000. So we sold the debtors for 90,000 rupees. 90% of that has been realized. So 1,20,000 into 90%. That is 1,20,000 into 90 by 100, which is 1,08,000. Creditors took away half the stock in full settlement of their account. Full settlement. When a liability takes over an asset in full settlement, then when the asset goes out, you credit realization account. When liabilities are settled, you debit realization account. So the journal entry is realization account debit to realization account. So when a liability takes over an asset, there will be no journal entry, no entry. So you don't have to post it to the realization account. As there is no journal entry, there is no ledger account, no ledger posting. So when a liability takes over an asset, creditor taking over stock, half of the stock or full of the stock or quarter of the stock, whatever. Creditor taking over the stock in full settlement, then there is no. Understood or not, my dear children? So creditors took away half the stock in full settlement, and therefore there will be no entry for that. And the next adjustment is remaining stock realized 72,000. So remaining stock realized 72,000. Realized means they were sold for 72,000. So remaining would be stock 72,000. We don't even have to calculate how much the remaining stock is. There is no need for us to do it. We are only bothered about the realize the value. Understood? After we have transferred the assets and liabilities in the book value to the realization account, we are only bothered about the realized value. So half of the stock was taken by creditors for full settlement. Forget about it. No entry for that. Liability takes over an asset and full settlement. No entry. And Remaining stock realized 72,000. How much is the remaining stock? Why do you care? You don't need it. You only need the realized value, which is 72,000. Understood or not, my dear children? So now we have sold all the assets. Apart from that, we also have to settle the liabilities. Now, in this question, they've told that creditors took away half of the stock in full settlement. Am I right or not, my dear children? So creditors have been settled. Those guys have taken half of the stock and told, okay, you don't have to pay anything anymore to me. We don't have to bother about those people. But there is no point here that tells you if creditors bank loan has been paid or not. But then there is a rule which is given by CBSE in the syllabus itself. It says that if there is no information with respect to how much an asset realized, you have to find out if that asset is a tangible asset or an intangible asset. If it is a tangible asset, the asset would have realized the book value. If it is an intangible asset, you're supposed to assume the realization value to be 0. Understood or not? Similarly, if there is no information on how much was paid for a liability, you have to assume that the full amount was paid for the liability, which happens to be 70,000 in this case. Understood or not? 2,20,000 in this case. So bank loan, they have not told how much we paid for the bank loan to settle it. But then we have 2,20,000. Understood or not, my dear children? So that is what is settled. So you write to bank account because the journal entry, when you pay liabilities, realization account debit to bank account. So in realization account debit, bank loan, and that is how much, my dear children? 2,20,000. Okay, good. Now you come to realization expenses. Realization expenses amounting to 14,000 were paid by Rohit. It was paid by Rohit. But who is supposed to bear the realization expense? Have they told who is supposed to bear the realization expense in this question in any place? No. If there is no information with respect to who is supposed to bear the realization expense, we are supposed to assume that the firm is supposed to bear the realization expense. The realization expense is borne by the firm. So it's the expense of the firm. Expenses will be debited to the only nominal account that is available during dissolution, and that is realization account. So realization account will be debited. Now, did the firm pay? If the firm had paid, we would have credited bank account because the bank account of the firm reduces and an asset decreases, you have to credit. But the firm did not pay. Who paid? Rohit paid. Am I right or not, my dear children? So now Rohit paid the expenses of the firm, which means we have to pay Rohit. So our liability towards Rohit increases. When liability increases, we have to credit it. So when a partner pays a realization expense, which he need not pay, Rohit's capital account has to be credited. And the realization expenses were how much, my dear children? 14,000. Realization expenses, 14,000. Here in brackets, for future reference, I'll write realization expenses. Understood or not, my dear children? So with this, what have I done? I've done all the adjustments for all the assets and liabilities. I've realized them, and I've also accounted for realization expense. But still, I'll go through the balance sheet and see if I missed out on anything. Have I realized building? Or yes, I have realized. Machinery? Yes. Furniture? Yes. Debtors? Yeah, 90%. Stock? Yes. Half was taken by creditors, half was realized. Come to the liability side. Have I realized creditors? Yes, creditors took away stock, so that's done. Bank loan, have I paid the bank loan? Yes, I just did the pay the bank loan. Sonia's loan, that doesn't even go to realization account. I don't pay Sonia's loan to realization account. So I'm not bothered with that, and I'm preparing the realization. General reserve and capitals obviously will not go to realization account. So now that I have posted everything to the realization account, my job is to tally the realization account and find out if it is a profit or loss. Now, how do I do that? I find the debit side total and credit side total and compare it. I find that the debit side total is 8,34,000 and the credit side total is 8,14,000. Understood or not, my dear children? Debit side total is 8,34,000 and credit side total is 8,24,000, which means what? which means I have incurred a loss. In a nominal account, if debit side is more and credit side is less, then it is a loss. Understood or not, my dear children? Because in the debit side, you account for all the expenses, and in the credit side, you account for the income. Understood or not, my dear children? So the loss has to be divided between the partners. So two partners capital account. The journal entry is partners capital account debit, which means in this case it is Sonia's capital account debit and Rohit's capital account debit to realization account. And loss that we have here is 20,000, 8,34,000 minus 8,14,000. And this 20,000 has to be divided in the old profit sharing ratio. What is the old profit sharing ratio? These two. Understood or not, my dear children? Understood or not, my dear children? Hope you're understanding. 20,000 into 3 by 5. And again, 20,000 into 2 by 5. Understood or not, my dear children? With that, we've come to the end of this problem. It's as simple as that, my dear children. And imagine this question being asked for 6 marks in a board examination compartment. Let me check. I actually have a doubt if they actually asked it for 6 marks. So let me just check. Okay. I have, I have the question paper, compartment 2024 question paper. And as you can see, Sonia and Rohit problem. Oh, sorry, my dear children. It was not asked for 6 marks, it was asked for 4 marks. I had that doubt. Okay. So with this, we've actually come to the end of this video. We've solved a 4-mark journal entry type question and realization, but we found that these 4 marks can be easily secured by us as it is a very, very, very simple question and anybody can solve it. If your friend is preparing for CBSE board exam, they might need this. So kindly share this video with them, and you also please do subscribe and like the video, and you please do give your comments on the video on if you find this useful or not. So it'll encourage me to make more videos and will give visibility to this channel, Caroline's Online Academy too. And all the best to all of you. See you again in another video with another problem. Till then, you people take care.